Today, we're going to talk about a company you've probably never heard of, but one that might just be one of the most critical hidden engines behind the entire AI revolution. The company is AIXTRON.
All right, think about it. We are bombarded every single day with news about AI, electric vehicles, and these incredible new displays. But as an investor, you have to ask the deeper question. Who's actually building the tools, the picks and shovels, for this massive tech gold rush? And that's exactly where AIXTRON comes in. See, they don't make the flashy chips that go into a Tesla or an NVIDIA server. No, they build the incredibly complex, insanely high-tech machines that the big chip makers need to even produce those chips in the first place. It is the perfect picks and shovels business model for the 21st century. So what are they exactly? Well, AIXTRON is a German engineering powerhouse, and they're the world leaders in something called deposition equipment. Now that sounds super technical, but just picture a machine that builds the world's most advanced materials layer by layer, literally atom by atom. That is what it takes to create the foundation for things like gallium nitride and silicon carbide, which are absolutely crucial for high-performance tech. Okay, so let's get into why this is such an interesting story from an investment perspective. We'll start with the bull case. It's really built on four massive long-term growth trends. And here's the kicker. In some of these markets, AIXTRON isn't just a leader, they're practically a monopoly. These are the four legs of the stool. First, you have power electronics for electric vehicles, basically the brains of the car's power system. Second, the same kind of tech, but this time for AI data centers to make them way more efficient. Third, the high-speed lasers that shuttle all that data around inside those centers. And fourth, the tech that's going to power the next wave of super bright micro LED screens. I mean, they're plugged into just about every major tech trend out there. Let's really zero in on that AI angle because it's a huge deal. Here's the dirty little secret of the AI boom. It's creating an energy crisis. Data centers are just sucking down unbelievable amounts of power. The only real answer right now is a new material called gallium nitride, or GaN, which makes power systems way, way more efficient. For AI, GaN isn't a luxury. It is an absolute necessity. And this is where it gets kind of crazy. When it comes to the specialized machines you need to make these GaN chips, AIXTRON has an estimated 90% market share. Let that sink in. 90%. This basically makes them the gatekeeper for the entire AI power revolution. You want to build a factory for this stuff? You're almost certainly calling AIXTRON. But wait, it gets even better. AIXTRON isn't just a one-trick pony. It's actually a dual play on AI. They sell the machines for the GaN power supplies, right? But they also sell the equipment that makes the high-speed optical lasers needed for networking inside those very same data centers. So they win on the power side and the data side. That is a pretty sweet position to be in. Okay, that all sounds fantastic. Maybe a little too fantastic. So let's flip the coin and talk about the bear case. Because it's not all smooth sailing. There are really two big issues here. A recent stumble in their financials, and a massive geopolitical choke point that hangs over the entire story. So here's the news that spooked the market. AIXTRON recently had to trim its guidance for the full year. You can see they brought the revenue forecast down a bit, but the real headline was the cut to their EBIT margin, their operating profit. A 2 percentage point drop is what got everyone's attention. But you have to peel back the onion on that margin cut, because the details really matter. Management was super clear on this. About half of it, 1%, was just from currency swings they can't control. The other 1%, that was from a one-time cost for some restructuring. So the key takeaway is that the core profitability of the actual business is still right where it was supposed to be. Now for the second risk, and honestly, this one is the elephant in the room. Just look at this chart. A massive 66% of AIXTRON's revenue comes from Asia, and a huge chunk of that is China. That kind of geographic concentration is a major red flag for geopolitical risk. And this quote from management just lays it bare. They've said publicly that they need to get a government export license for somewhere between 30 and 50% of their entire company's revenue. Think about that. A political decision in Berlin or Washington could, overnight, wipe out a huge chunk of their business. This isn't a what-if scenario. It is the single biggest threat they face. So, how do we put all this together? You've got the incredible bull story of a near monopoly on one side, and the scary bear story of a guidance cut and huge political risk on the other. This brings us to the synthesis, what we can call the double discount thesis.
The argument goes like this. The stock is cheap for two main reasons. First, it's getting discounted because the business is in a temporary soft patch, a cyclical low. Second, it's getting a massive discount because of that huge China risk we just talked about. The investment opportunity is based on the idea that the market might be overdoing it on both of those discounts. And you can see that discount pretty clearly right here. If you compare AIXTRON to a key competitor, ASM International, the difference is stark. AIXTRON trades at a valuation of about 10 to 12 times. ASM, almost double that. That huge gap is exactly where investors see the potential opportunity. So the entire thesis boils down to this one sentence. This is a chance to buy a dominant, world-leading company with a near monopoly in a critical growth market, and you get to buy it at a cyclical low point. The catch? The price of admission is that you have to be willing to live with that very real, very big geopolitical risk. Okay, so if you're watching this story unfold, what are the key things you need to keep an eye on? What are the signals that will tell you if this thesis is playing out the way the bulls hope? Here are 4 big things. First, watch their quarterly order intake like a hawk. Has it stopped going down? Is it starting to turn up? That's your best leading indicator. Second, can they defend that 40% gross margin? It proves they still have pricing power. Third, any and all geopolitical noise, any news about export controls is a huge deal. And finally, watch for news on their next-generation technology. If a big customer signs on, that's a massive vote of confidence. And that leaves us with the final, multi-billion-dollar question. You've got this amazing company with a rock-solid balance sheet, a near monopoly in a key AI market, and it's trading at a big discount. But it comes with this giant, unpredictable risk attached. So the question for any investor is pretty simple. Is a near monopoly worth the geopolitical gamble?